by Fintech Convergence Council and Payment Council of India, of Internet and Mobile Association of India, and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. We would like to thank our partners, powered by Razorpay, brought to you by Amazon Pay and WhatsApp in association with partner Google Pay, Open Financial Technologies, and digital payments partner Cashfree Payments. Our next session is on workshop on the influence of fintech on global digital economy and the role of market infrastructure, a discussion. Without further ado, we would like to introduce our moderator and our panelist. We have Mr. Harish Natarajan, Lead Payment Systems Development Group, World Bank, Mr. Krish Sriganth, Senior Consultant, Saudi Payments, and we have Mr. Ponaya, Dean and Workshop Advisor, Institute of Science and Technology, Chennai. Delegates are requested to kindly post their questions on Q&A window. Our panelists will answer them at the end of the session. Over to you, Mr. Ponaya.
Thank you. Thank you, Ritika. Good morning, good afternoon, good evening, wherever you are geographically located. I welcome you all for the workshop hosted by SRM Institute of Science and Technology, College of Management, on the topic, the influence of fintech on global digital economy and the role of market infrastructure in discussion. I deem it a great privilege to welcome the eminent speakers of our session, Dr. Harish Natarajan, Lead Payment Systems Development Group, World Bank, Washington, USA, and Mr. Krish Sriganth, Senior Consultant, Payments and Accounts to Account Strategy, United Kingdom. I once again welcome all the participants. Thank you.
Thank you, Dr. Ponaya. So now we'll just spend the next few minutes to just see the profile of Mr. Harish and Mr. Krish. To tell you about Mr. Harish, he's the lead financial sector specialist on payments and market infrastructures, and he leads a global team working on payments. Mr. Harish is a core member of cross-functional, cross-sectoral teams in the World Bank, working on Universal Financial Access 2020, ID for Development, Government Payments, Digital Economy, and Fintech. Harish also represents the World Bank in the working groups of the Committee on Payment Market Infrastructures and the Bank for International Settlements and Fintech related working groups at the Financial Stability Board. Prior to joining the World Bank, Harish worked with Visa Incorporation in the South Asia region at various senior level positions in business development, operations, and risk management. And he also worked in Citigroup, Infosys, and various other technology companies in the areas of payment systems and retail banking. Harish is also, most importantly, he is an alumnus of IIT Madras and IIM Calcutta. So we are very happy to have you here, Mr. Harish, for this session. Next about Mr. Krish Sriganth. Krish is a financial consultant in real-time payments and fintech. He has over 23 years of experience in product management, program management, architecture, design, and full SDLC within the payments and fintech industry. Krish was a key person in critical national payment systems between 2016 and 2019, especially in the UK, US, Thailand, and Peru. Currently, Krish is consulting for Saudi Payments and Saudi Arabian Monetary Agency on a $250 million real-time payments program. And it's about realizing Vision 2030 for a cashless economy in Saudi Arabia. And also to add on, Krish is an ISO 222 expert messaging standard. Okay, so this is about Mr. Krish Sriganth. So we are happy to have Mr. Krish and also Mr. Harish here on board today, and we are very eagerly looking forward to hear from you all the related information about payments. So thank you both of you, and now I hand over the session to both of you. Over to Sriganth.
Okay. Good day, everyone. It's a pleasure to have you all on this session as well. Welcome to all the participants. And thank you to all the organizers of this session. If any of the participants have wrongly come into this session, not a problem. We will ensure, myself and Harish will ensure that it is a very useful session for you going forward. Right. So the next 60 minutes will be very interesting for you. Right. Now,
Good morning, and I think Shivani, I don't think she has.
So today we are here to talk about the influence of the fintech on the global digital economy and the role of market infrastructure on this topic. So when we talk about global digital economy, we are inherently talking about the technology and the development in the space that brings in the financial engineering and also the net worth of the digital markets and all that, right? So technological developments always happens, but where it matters to digitally providing all walks of our life, that's where we start to count it as a global digital economy. Now, what makes up the global digital economy on top of the technological developments and the size of the or the net worth of the digital markets is the expected growth rates in the future for that. So, key drivers for the digital economy are the underlying market infrastructure. Okay, what are the systems that are present in place to make anything that is digital to reach out to the people? So the market infrastructure is a very key when it comes to global digital economy, right? Secondly, the emerging technologies and how they are applied to the system, and how they are applied to financially engineer some solutions that facilitate the global digital economy. And the third important driver for the digital economy is the dynamics of the market. So, needless to explain, in the pandemic era, you see that a lot of companies which are remotely present, like Amazon, they have exponential profits, right? Whilst everything else is shut down, there is a new way of operating, and everything is now digital. Everything is now done remotely. You don't have to even work from offices. Everything is made digital. Now, how is it, these sort of the changes in the market, the dynamics in the market, contributes effectively to the global digital economy, right? So, so we saw what the global digital economy is about and what are the drivers in it, but what value does fintech brings, and how it directly relates and influence the global digital economy. Now, fintech brings financial inclusions. It helps to reach broader. We talk about M-Pesa and in other sort of wallets and things which are far-reaching to even the remotest place on earth, and people who don't have access to banking have facility to payments or have access to payments. This is made possible using the fintech way of thinking, and that is fintech brings financial inclusion, and it is extremely cost effective, right? So the operating costs are low, they are omnipresent, they don't have physical places to be in, and the reduction in their cost helps them offer more cost effective ways of offering their products to the community, and they are for that reason they are more efficient than the conventional financial institutions. The conventional financial institutions have got a legacy operating model, and the legacy operating model will come with a strict position where they cannot change their operating model immediately to suit the needs of the digital economy. So this gives a cutting edge to the fintechs, whereby they give more efficiency and value to the society, and at the same time they have they give a tough competition to it being a newcomer also to the traditional banks and traditional financial institutions. Secondly, the speed of the services. Look at the Apple Pay, Google Pay, or Razor Pay. Traditional services for at least payments, it took longer to settle and clear any payments, but we are talking about seconds, if not minutes, with the fintech. Then, of all these things, they have a positive customer experience. AI-driven, machine learning-driven, understanding the customers more clearly. Fintechs provide a positive customer experience, and of course, this is a key feeder to the global digital economy. Now, what are the most important fintech areas that we see in trend today? Are digital-only banks, banks that are not present in your high streets or in your normal places. They are digital-only. They are able to operate more cost-effectively and much more effectively than the traditional banks. We are seeing that in day-to-day life. We are seeing alternate credit scoring, not the conventional paper-based credit scoring. It's all machine learning driven, and it's more effective. So we see this in the fintech areas as well. Real-time payments, we can talk about it all day, but real-time payments is a very key differentiator, and it makes a huge difference in people's way of life as well today in the fintech arena. Blockchain technology, of course, the blockchain technology or the distributor ledger is not new. Everybody understands that, but it has taken a new usage case. The way we use the blockchain technology today is very, very novice and innovative. Be it cryptocurrency based or anything else, it means a lot. So that is being used today. Next comes the request to pay, right? So this is another big talk in the town. Request to pay is changing many things in the community within the payments. People used to use something like direct debits, which is sort of a full payments. That is sort of slowly being replaced by the uptake of the request to pay, which means that the person who is paying the bill has got the right to refuse to pay where he gets an unsolicited payment. And currently banks are facing a lot of problems with the direct debits where they are not party to any problems with the direct debit or the payment. But the payer, what happens, a conversation between the payer and the biller happens to be the bank's problem to pay. So this problem of the bank is decoupled by the introduction of request to pay, and it means a lot. Then we have P2P payments, including those which are over the QR codes and things like that. So that is also flourishing. Micropayments, push payments based on the P2P is also getting more and more popular with the fintech. Payment initiation service, come the open banking, you don't have to initiate a payment from your bank A to bank B. If you have multiple banks, you can use a common service which is called the payment initiation service, from which you can initiate a payment from outside of your bank to somebody else. So this is also up and coming, and it's very vibrant. Income and financial health verification. This is thanks to open banking. Income and financial health verification is happening based on the open banking data and the ability to connect to the banks remotely to verify bank statements to ensure financial health, of course, upon consent and for the rightly vetted organizations that are looking to verify the income. These sort of things are also making it very clear. So the decision-making process, which are dependent on the income and financial verification, becomes faster. Approving your loans, approving your home loans, approving your mortgages becomes so rapid. With the ability for you to be able to fetch the income details and the financial health details at a click of a button. So that is another important thing. And pay by your bank account, especially over e-commerce. Today, you're able to pay from your bank account, not having to always use your credit card or your debit card, but having to make your payment using your online banking, but sitting inside your airline booking screen. So from within your airline bookings, you can say pay by my bank, and then he takes you in a seamless way into your bank to take the payment from your account, which you will authorize, and it's a push payment. So these are the salient features or things that are happening vibrantly today in the fintech area that is contributing to the global digital economy. So let us look at some few business cases in the fintech space that are popular. Now, some of them are very low values in my examples. Some of them are very high value in my examples. Like if you look at the if you are pulling your car into your gas station and you want to make a payment, you don't have to get down, you don't have to swipe your card, you don't have to use anything at all. Your vehicle registration number is used as a proxy in some implementations, and that is associated to your bank account or your wallet, and it itself pays. So you just have to authorize, for security reasons, sitting inside the car, that payment on your mobile whatsoever, and then that device confirmation that you are authorizing that payment is to prevent the fraud. That if somebody is taking your car away, they can't take your car away and fill it as well. Right? That can be dangerous. But these sort of authorization in place are evolving in fintech and helps it more safer to use. Right, so then a request to pay apps from bills and payments, sharing your bills in the restaurants when you go together with your friends, micropayments, but still it makes a lot of convenience and wow factors coming with that. Automatic toll payments, when you drive through your car through toll, again, the vehicle registration number or some sort of a unique identifier for your drive recognizes that any payment that you need to make either upfront or on the drive online is all done and dusted using this automatic toll payments. Again, thanks to fintech for that sort of data integration. Then comes innovative products from open banking data. We spoke about the income verification and credit scoring, that sort of thing. But on top of it, I can give you another example where the lenders can make use of the data. They without invading your privacy, they can work out that you are probably in need of money because your direct debits are queued, your incomes are predicted, but you are probably likely to have a shortfall in your current account or in your bank account. And as a result, there is a room for somebody to come and give you either an overdraft if it's your own bank, or a short-term lending company can come and offer you, a cost-effective loan product to you. It's a win-win situation for both. And by giving consent to the open banking data share, you get to access these sort of innovative products as well. So these are sort of use cases that we are talking about. On top of it, there is a very interesting thing about cross-border remittances. It is a very high-value thing, right? Fintechs do today make use of the blockchain technology, and they make cross-border payments, which used to take about 4 days in remittances, which took 4 days in the past. Now it only takes 12 seconds, 13 seconds, 15 seconds through these sort of fintech companies. If you go to a conventional, traditional high street bank, you will see that it takes about 3 days, 4 days, depending upon what technology they have adopted. The banks that have adopted, the modern technologies are to one side. They are also probably classified as fintechs, or they are sailing together with the fintechs. But the traditional banks, even today, take 2 to 4 days to do the cross-border remittances, and it is a game changer. And the cross-border remittances for the global digital ways or through the fintechs, if my calculations are correct, it is somewhere around 50 billion just through the fintechs alone, right, per annum. Now, the cost of sending the cross-border payments through the traditional banks, I'm sure you can access the World Bank's statistics. and you will see that it is about 12 to 15% costlier, let alone the foreign exchange skimming that the banks will do, poor rates. The fintechs give you better rates, and also the cost that they charge you to do these cross-border remittances are minuscule, right? At least there is a lot of cost effectiveness that make them more attractive. And this is a stiff competition that these fintechs are putting against the traditional banks, right? So we saw some of the use cases here. Now, fintech players, there are a lot of different types of fintech players. The fintech players comes in different sizes and shapes. The moment somebody says fintech player, they always relate to a startup which does some sort of micro value payment related or some sort of a service related fintech startups. But that is fair. They all start up with a very gap in the market sort of value, where they see that there is a gap in the market for a particular business problem. They try to solve it, and these fintechs come with that novel solution, and then they scale up from there. On top of that, we have fintech that are ecosystem providers, right? Say, for example, they provide end-to-end banking service completely, right? So those sort of fintechs also, so from medium to large scale net worth, we can see there. We also see fintechs as an innovative and new FI. Say, for example, a bank which is completely no physical branches but only exists digitally, right? And they offer unimaginable amount of or value for your savings, for your loan products. Not just because their operating cost is low and they are passing on the profit onto the customers, but the gains that they have from having a modern technology also gives them a cutting edge to be able to serve anybody in the region, right? They are not physically present. As a result, their reach out is very broad, right? All they need perhaps is just the availability of the internet, and they are present everywhere. So we hear a lot of digital banks. In the UK we have Monzo and a few to name. In UAE as well, the first digital bank has been approved by the local central bank, and we see a lot in Saudi Arabia as well, right? More licenses have been offered to digital banks. So this is the norm, and this is coming, and these are fintechs as well, right? And then we have market infrastructure providers, big companies like Visa, MasterCard, and things of the like. They provide market infrastructure as a service, right? So if not already, they are lined up to provide these services. They already are providing in the card rails, but they are also about to, if not already, to provide that scale of large market infrastructure, which is nationally important, as a service to many countries, right? So they are like monster companies, right? So from a typical startup which operates from their garage to a huge multi-trillion-dollar corporates, we have fintech players in all sizes and shapes, and they all contribute to the global digital economy, right? So what lies ahead of us? So what lies ahead of us in the global digital economy is the advent of the CDBCs, it should be CBDC, central bank digital currencies, and then those are the normal Bitcoin like cryptocurrencies are putting stiff competition for the existence of the fiat currencies, and as a result, the central banks around the world are under immense pressure to come up with some sort of a CBDC solution to the market. So a lot of talks happening, and that is also laying ahead in front of us for global digital economy. The blockchain technology adoption rate is also increasing, and we see a lot of that. Quite a few cryptocurrencies which are making use of the blockchain technology is well known and popular. I don't want to name them, but you see that way that is going to, if not already, shape the global digital economy in a exponential way. Open banking, that's also making a lot of change in the society. DNA computing, quantum computing, Internet of Things, all of these. And if you look at this, at the center of all of these, what you have is fintech. Global digital economy is not necessarily made out of fintechs or not necessarily made out of financial technology or payment market infrastructure. However, the most resonating, most game-changing contributions come from the financial sector, and that's why it is very important to note it down. And that makes this particular this topic and the theme of this year's festival more relevant, right? And when we talk about the market infrastructure, we also have the fintechs, which is operating in this space, and the fintechs, like say for example, just an example I'm quoting, like Apple Pay or Google Pay or Razor Pay, right? We are astonished. We are, by the look of it, we say, wow, quite a lot of wow factors, good customer experience, your ability to send and receive money at a click in your device, handheld. Well, that is fine, but if Apple Pay or Google Pay or Razor Pay were to operate as a product, as an app, as a front end, as a solution in a country, in a market, where the market infrastructure does not support immediate payments, say for example, does it sound right? Because at the end of the day, Apple Pay have to eventually clear and settle using a central infrastructure. And if that central infrastructure is a constraint, it may not be good. So this is where this market infrastructure plays a very key role in laying the rails for all the innovations that fintechs have got to do and the underlying benefit to the global digital economy, right? So this is very important. We are talking about the ecosystem here. And in any ecosystem for that matter, the system is as strong as its weakest link, right? So if the central infrastructure itself is weak, then it can't help. And this is why organizations like BIS, World Bank, and principles like PFMI shape the market infrastructure, ensure that it is robust enough, right? So we will talk more about it in the coming slides. But however, it's very important for a market infrastructure, financial market infrastructure, to have real-time payment processing capabilities 24/7, 365. That is the key thing here. Yeah. So then, how this traditional, what we have today is the traditional market infrastructure, albeit they may have immediate payment capabilities or real-time payment capabilities. They may have some standards across them, but what else, right? So the maturity is brought in by the design. The design for it comes from the nature of it being a nationally significant critical infrastructure. So payment infrastructure are huge, and they are the backbone of the economy. They are critical for the country, and as a result, every country pays its utmost attention through their central banks to have a robust system in place. Now, so these sort of things are assured by PFMI, governed by the principles coming from PFMI and Financial Stability Board and Financial Action Task Force, FATF, all that, right? So they have, what they contribute to us is ensure that the central infrastructure is hosted across multiple sites. They are active, and they are highly resilient, and they are highly available 24/7, 365. They don't go down at all any day, right? And they have top-notch security systems in place, whether it's encryption or digital signatures or whatnot, and have private connections. They assure that the disaster recovery drills are happening. These sort of principles come from PFMI, and this is where Harish and his team play a very significant role in the whole world, right? So Harish will talk a lot about it shortly later. But also, it's not just good enough to have rules, guiding principles. It needs to be monitored and ensured, and the policing work sometimes has to be there, and that is done by the BIS, right? So they do all that work and ensure that the financial market structure is stable, steady, and consistently performing. Now, these traditional infrastructures typically have some standardized services, right? So there's some sort of standardized services that we are talking about are high value payments, immediate or real time payments, and they are talking about batch payments. They all have different use cases, and as a result, all of these have got to be there in one form or shape on top of any value added services that needs to come from the investment made. And they need to have some standards. That is made possible thanks to ISO 222. The messaging standards are there for pretty much everything and anything that you want to standardize across the messaging between the parties and the players within the market infrastructure, right? So that is very, very important. Now, so having said all this, right, what we need to know is that we talk about, in a very high level, we can talk about how a typical transaction will flow in different schemes that we said. We said that there are standardized schemes expected typically within every market infrastructure. So the four sort of five in different areas, schemes that you would normally see is high value payments, which clears and settles in about 1 minute, and it can take up to 24 hours, subject to the funds availability and other operating conditions, right? Or a bank may be down, so it may take longer for them to come back and then process the transaction and all that. So the financial markets infrastructure in the center ensures that there is standards, there is consistency, and there is a predictability in the transactions when we are talking about high value payments or any payments for that matter. So that is the key role of the infrastructure in there. And in the high value payments, you get to see that obviously it is high value payments, which means we are talking about million plus in a single transaction. Plus, you can also have future dated payments in high value systems, right? Then the counterpart to that is real time payments. The amount that we are talking about is not high, obviously. It's not high value payment. We're talking about 100,000, 200,000, something like that in mature markets, and then in the entry level markets we are talking about 40,000, 50,000, depending upon their maturity level. Right, that's the single transaction limit that will pass through. These are backed by either pre-funding in the central bank's account or sort of a collateral reserve or whatnot, and these get settled, unlike in high value payments, which is most likely to be 99.99% of the time. High value payments are real-time gross settlements, which means that the payments are settled in real time, but every payment is looked at, cleared, and settled in their unit. Right? Every single transaction is a separate settlement from end to end. Whereas in real-time payments, it's a deferred net settlement, which means that the settlement happens at a fine day in a particular fine time in a particular day. However, it is guaranteed by the availability of the funds in the so-called reserve accounts, right? So this is how real-time payment work. The biggest advantage of real-time payments, which is specifically used for the use cases that it attracts, is typically, it's less than 5 seconds. Before at a click of a thumb, or you get the payment delivered, cleared, and settled to your beneficiary, and the fate of the transaction is known to the person who is sending you the money. So that level of sophistication and speed happens in real-time payments. Batch payments, of course, every country will have and should have batch payment systems. When you're talking about payrolls, when you're talking about dividend payments and things like that, which are regular occurring, but they are, they don't have to be, single transactions every time. Those batches of payments, payrolls from, say, from every staff from World Bank needs to be paid on that particular day. We are only talking about one organization there, but think about a bank which serves many of its corporates, many of its customers. They all have to do sort of payrolls and all that. The batch transaction takes it all, process all the batches, and then there will be a single credit or debit to go out to a beneficiary bank, right? So and the sending bank, of course. So this is again made possible by doing a batch processing, completely different model, and it is effective for a specific use case which are similar to payrolls and things like that. So when we talk about this in batch payments, settlement happens before clearing, right? So when settlement has happened, clearing must happen in batch payments, and it flows, and they are all netted and settled, as I said earlier. And in terms of value-add services, now that we have three different types of value payments, high-value payments, real-time payments, batch payments. The other sort of things that we are talking about in terms of value-added payments are ability to make use of the same rail, similar to the real-time payments or the batch payments, to a request for information using the bank rails, right? So when somebody is filling a form, if the form needs to be filled and the form, the data that needs to be filled in the form is already in the bank's KYC, then it's a matter of sending the request for information and get the information back in a format that is consumable to fill the form that you're trying to do, right? So if I'm filling my driving license for that matter, when I do a request for information by clicking a button, it fetches the authentic data relating me that are relevant to the driving license application form, and it gets filled by the KYC data from the responding entity, and they backfill it and send it to me, and my bank will get the data and electronically populate it on my form. This is just an example I'm talking about. Then we have request to pay, account verification, ensure that the beneficiary to whom you're trying to make a payment is actually the beneficiary that you have in mind. You don't pay to Mr. X when you have Mr. Y in mind. But by doing the account verification, it ensures that the account that you're trying to pay to is the account actually is the account that you're trying to pay to, and that sort of thinking, right? So these are all there in place. In the value-added services space, you also have proxy or alias-based payments, coupled with the real-time payments. With proxy-based system, you are able to associate your bank account details to a proxy, and you don't, for privacy reasons, you don't have to share your bank IBAN or your bank account details or your routing code or RT number in the US. You don't have to do anything like that. You just have to give your mobile phone or your alias, for that matter, your email or your national ID or Aadhaar ID, whatever, and it will translate that and keep it secret to everybody else. But just for the bank-to-bank information, proxy-based systems can work, and these are all value-added services. So these are the four sort of traditional market infrastructure that you see today. These are very robust. They are been here for a few years now, and they are more stable and predictable, and they are mature. However, we continue to see the advent of the new technology stack, and that results in new evolution, right, in the global digital economy. So new things happen. Blockchain comes, and CBDC. The central bank issued digital currency comes. All these happens, and when this happens, the market infrastructure also has to evolve. Right? These systems may not be fit for purpose in another 5 years, 10 years, whatever. Right? So, what is in the pipeline? My friend and colleague Harish here will talk us through about some of the changes that are underway in the world of FMIs.
Thank you, Sriganth, for taking us on a whirlwind tour through the various presentation. various fintech developments. Thank you, Dr. Punaya and Dr. Sriganth, for the opportunity to share my perspectives. So let me now try and pull up my slides. Okay, here you go. Sriganth had talked about the changing nature of some of the landscape, and he also mentioned that because of that, the market infrastructure has to evolve. So what I will try and do in the next 10-15 minutes is to take you back a little bit to really examine what really market infrastructures are, and what is changing now. So I have three definitions from three different institutions. SWIFT, as you know, is the entity which manages, provides infrastructure for exchange of information related to on the financial sector side at a global level, and the Bank of England, and then the CPMI IOSCO, which are the standard-setting bodies, and then who develop the principles for financial market infrastructures. So if you look at the definition in all three of them, they fundamentally talk about networks that allow financial transactions to take place. They emphasize the multilateral nature, that there are multiple participants, and that's what defines a system in a classical definition. And then also it is about clearing, settlement, recording payments, and then it's also about matching and depository functions. So all of it is related to the financial transactions, and that's the emphasis on this, and it is also about multilateral. The digital economy, as also very eloquently articulated by Krish, maybe brings a need for new types of infrastructures, and I will talk about maybe 5 different, and then there are many more we can talk about, and then I'll try to conclude with perhaps a new definition of market infrastructure. So first one I would like to talk about is what I would call as API hubs, and these are systems which come in between existing legacy systems and then also participants like banks and other institutions, and third-party applications which want to access that information to provide some value-added services. And a typical classic application of this is the open banking. And in the case of India, the UPI services is fundamentally based on APIs. And the API platform is provided by NPCI currently. It is integrated into some of the other systems they offer. But conceptually, this is a separate, could be a separate infrastructure. And this is a direction in which many countries are going. And it brings a lot of efficiency, because if you do not have this API platform in between, of course, you can have bilateral linkages, which is simply not viable as the number of participants grows. The other option is to have some kind of discovery of APIs and then also publication of APIs by different participating institutions. But even there, the entity which operates the directory of APIs can still be considered a market infrastructure. So either way, when you move towards open banking and third-party applications, you need something which will help connect the different types of participants now. And that is also one of the elements of the definition of the market infrastructure which I was showing earlier. It is typically about participants at the same level in the processing value chain. They are not necessarily different types of institutions. Here in an API platform, we are actually bringing together two different types of institutions through a common platform. So that is one. The second is we talk about when in the world of digital economy, we talk about doing things remotely, doing things online. So all of that ultimately will depend on the individuals who are transacting to be able to prove to each other that they are transacting with the right party. And then there could also be certain rules which are typically required to be enforced, which are enforced in an person-to-person interaction. This could be, like, for example, verifying the age of a person before providing a service. It could also be related to verifying the address. It could also be related to verifying some credentials in terms of do they have the professional qualifications to do a particular participate in a particular service. So what is coming up now is these new kind of platforms, and conceptually they are also called as federated ID systems, where The government, of course, is one ID provider. They are in some sense the fundamental and foundational ID infrastructure in the country. They can legally, whatever the records of the government will perhaps trump anything else, right? But then there are other kind of identity providers who can be thought about, including, for example, like if you take many countries where you have Uber and in the case of India, entities like Ola, they perhaps know much better, can say with more degree of certainty what is your residential address, or an e-commerce company can move with more degree of confidence telling what is the residential address than perhaps the government, because you might have changed your address and you're not yet updated the details in the government record, right? So they could, for example, be one of the identity providers for a limited set of information, which is the address. They cannot prove your age and so on, but they can tell you where you live. So like this, you can envisage different kinds of entities, universities and so on, who can also be identity providers. So they can be brought onto a platform. Then there's an authoritative source, and then there are relying parties who really are willing or want to validate certain things. So a digital ID platform brings together all these different people and allows real-time exchange of information to ensure that the counterparties can assure themselves that they are transacting with the right party and they're eligible to transact. And this can be thought about as a market infrastructures. It is bringing together different participants. It's allowing exchange of information which is necessary for the transaction to be completed. So that's the second. Then the third one is, and this is something that this is a graphic from a Government of India website about the recently launched the OSEN network on credit enablement. And here, if you look at it, here again, it's very similar to the ID platform concept I was mentioning, but of course, the information exchanged here it could be different. It is about much more detailed information about the person's financial history, and so here we can think about it as banks providing information, but one can also think about introducing other class of entities which might have more information about a business, like for example, a supplier or a customer of a business might have more information to tell you about the business credibility and the business potential of that particular entity. So the financial institution can tell you some things, but the business partners might be able to tell you more. So if you have a distributor, the distributor can tell you how much typically this particular merchant buys on a periodic basis. So I think you can think about bringing in different kind of entities who have relevant information, and that information being provided when needed to a different party based on the consent of the user. And you need a platform to bring together these different entities and to also can ensure that the customer's consent is taken. So behind it, there might be an ID platform. Behind it, there will be digital certificates. There's quite a few things which happen behind. But fundamentally, if you look at it and think about it, these can be considered as market infrastructures. Then the fourth one, Krish talked about blockchain. One of the elements of the blockchains as a technology is that it can bring together different types of providers. It can bring together different types of information exchanges onto a common platform. Though, of course, it is not a centralized system. It is decentralized, unlike a classic market infrastructure. So what I'm trying to show here is there are many unorganized corners of the financial sector and also in traditional commercial interactions. Like, for example, if you have a farmer who's producing say mangoes or any other fruit or any other agricultural commodity, there's a very long value chain from the farmer to a supermarket. There are various entities involved in between. There are some financing flows involved. And currently, there is no centralized view. There's no unified view, rather, of the information flow. And because of which, sometimes the farmers do not get the right price for their produce. There are a lot of middlemen in between. And there's also kind of a lot of information which could have been useful is lost because there's nobody has a unified view. So there are systems coming up now built on blockchain which bring together different entities, starting from the farmers to the quality assurance who verify the quality of the product, segregate them. Then there are transport chains, transportation providers. Then there are buyers, and then there are clearing agents. So there are whole sorts of entities. All of them can now interact and have a unified view of information, and that could be enabled by new types of infrastructure, but these are decentralized and not the way we traditionally think about a market infrastructure. And then a similar example one can also think about for trade finance, where it is, of course, a cross-border thing. And then here, again, there are a lot of information which are exchanged in the trade finance flow. And currently, there is no uniform view. And there are various companies which are working to resolve them and then solve this problem. Then staying on the topic of blockchain, if you look at a traditional capital market infrastructure world, you have a number of entities involved. So on the one side, you have the end users, which are like the issuers, the companies which are raising money or issuing a bond. And then you have investors like you and me who are participating and investing in that instrument. So there are several intermediaries who have to come in between, including critical market infrastructures like clearing houses, security depositories, which have to come into play for the transactions to be completed. There are companies now which are working towards developing this infrastructure using blockchain, and to basically, again, the same concept as what I was mentioning in the previous type of market infrastructure, for everybody to have a unified view, to cut down the time it takes, and then also to remove certain intermediaries, and that way reduce cost, improve the speed, and so on. And this type of infrastructure, to begin with, likely will get introduced, and is actually getting introduced now, for digital assets. So by digital assets, I mean things which are created digitally, and this could be crypto assets. It could also be the digital representations of certain existing financial securities and so on. So the digital assets need a new kind of infrastructure. Because they are the underlying technology allows you to do peer-to-peer transfers, and then this requires a new kind of infrastructure, and this is coming up, and several countries are looking to introduce it. Some of the stock exchanges across the world have introduced digital asset market infrastructures to cater to this need, and this again brings to the fore the point that now you are bringing in different types of entities onto a common platform, which was not connected before. So in the earlier types of market infrastructures, the end users never really participated in the platform. It was the market participants who were connected. So the system was actually connecting only the market participants. But now the new kind of market infrastructure which are coming in might actually bring in the end users also onto the same platform. So with these 5 different types of market infrastructure which are coming up, one maybe needs to really look at how do we call a market infrastructure? And I'm just giving you my personal view here. This is not from any standard setting body, and this is not necessarily a definition which is required when you talk about the financial market infrastructures itself, but more broadly, if you talk about the digital economy, one could perhaps talk about market infrastructure as a multilateral system amongst one or more types of institutions, enabling exchange, recording, or exchange, or validating control of asset or information. So here you see we need to start thinking about information and rather than exchange of information rather than conducting financial transactions, because at the end of the day, there's information which is exchanged, which is what leads to the financial transaction being completed. And if you look at it, if you abstract it to that, then you are able to envisage how market infrastructures can come into play for exchange of credentials, validating identification, and then exchanging of various documents and information necessary for some of the commercial interactions to happen. So with that, let me stop. And my idea in my short intervention was to really perhaps make us think a little bit more about how do we look at market infrastructures. So now I would request the participants to share any questions they have. From my side, let me start by posing a question to Krish. So Krish, you talked quite a bit about the different types of innovations and the digital economy, etc. Can you talk about what are the implications of these new types of market infrastructure you're referring to on the existing labs, because they are not operating in a vacuum. They are coming into an ecosystem. So what are the implications of some of the new developments on the existing market infrastructures?
Thanks, Harish, for your presentation. First of all, it was very, very thought-provoking. Never thought about the new market infrastructure to be of this dimension, but a very interesting space. And a bit scary as well, because me coming from traditional infrastructure, quite a lot of gap to cover for me as well to catch up with. So that's one thing. So to answer your question, so what are the implications on the existing market infrastructure due to the faster payments and things like that? I think some markets have actually evolved, and they are not still in the sort of legacy thing. With the adoption of ISO 222, all the countries that has picked up ISO 222 have got a cutting edge leverage over others, whereby they have a better position with respect to promoting faster payments. So faster payments existed even before the adoption of ISO 222. 8583 rails were there, or some proprietary rails were there, messaging standards were there, and some countries went ahead with faster payments. It was not a problem. The issue here is that continuing on these sort of non-standard or not fit for modern use cases, infrastructures will have to think twice about it now. It's already too late for them. So that's my professional opinion. And the countries that have gone towards implementing things based on ISO 222 have got better ways of exchanging and rich ways of exchanging the data to carry not just payment but also the value-added messages that we were talking about, right? To that end, I think the way the blockchains are going and all that, there is still a life expectancy for about 5-10 years for these so-called mature modern infrastructures, but time will tell. How rapid these things happen, God only knows.
Thank you. So let me check if there's any questions from the audience. I don't think there's a question about reference books and articles on fintech. I think that we can share offline. So I think we are close to the hour, Krish. So should we kind of bring it to a close at this point?
Sure. I have one quick question for you, very interesting one. So personally, it will benefit me, certainly for all the audience as well. That how different you think this class of new modern market infrastructure would be different from the traditional ones that we have today?
Yes, I think that's a good question. So this is an evolving space. I don't think that there's not much been written on this. But from my perspective, I think one key difference which is coming up, these new types of market infrastructures, is as I was alluding to in my intervention, there are typically a market infrastructure brings the same class of institution onto a platform. And the new types of market infrastructures are bringing in different types of participants, right? Including potentially the end customer, if it is a blockchain kind of an environment. So I think that is one big difference. The second is typically the financial market infrastructures were embedded in the financial sector, and very clearly they were regulated by the financial sector authorities, right? So there was no question about it. But these new kind of market infrastructures might actually develop outside the regulated financial sector, but they do play a critical role in the functioning of the financial markets and financial services and so on. So then what is the role of the financial sector regulator? How do they participate, and how do they oversee it? How do they monitor it? I think becomes a tricky issue, right? And here you might have to envisage collaboration between different regulators from different sectors to come into to join hands, right? The other point is that by definition, some of these infrastructures can become cross-border quite easily. In particular, if you look at some of the decentralized technologies. And there again, it brings in this issue of cross-border jurisdiction, etc. So which needs some careful attention. So I would classify these three as the critical differentiators of the new type of infrastructure.
Perfect. Makes sense. So I think there is a question coming. Is there any impact of COVID-19 on the infrastructure?
Yeah, see, I think in some sense, I think because of the pandemic, the relevance and criticality of the infrastructures have increased. And because of that, I think the operational reliability of the market infrastructure has become extremely important. And the operational reliability, of course, comes from the system hardware and things like that, and then also proper disaster risk plan, disaster recovery planning, and so on. But then there's one element of this whole thing, which is the human element. Like there are ultimately people required to operate the systems. And what happens if they are unable to work, right, because of whatever challenges, and then there are entire kind of locality, entire cities, entire country in some cases are getting locked down. So how do they get to where they need to be? All of those are aspects which need to be thought about. I think the typical business continuity planning might not pay as much attention to these issues. And I think this pandemic has really opened our eyes on that.
Sure. So I would like to add one point there that we were at the middle of the COVID-19 peak when we launched here in the Saudi payments, right? So the payment volumes were extremely high in a very short span of time. I have been associated myself to other implementations and go lives, but this was really unbelievable, right? So the volumes were so high, the footfalls on the branches have reduced, or on the ATMs have reduced, and all have started reflecting on your infrastructure, right? So that was unbelievable, So it was like a 2020 last few minutes in my heart when things were going live. We went live in the middle of the night at 12 o'clock in the night. Between 12 and 3 a.m., we had several million transactions. I couldn't believe it. But that's what it is. So the dynamics are changing, and there's also another question here, right? Is there a countrywide difference in payment and market infrastructure? Of course, they are. No two countries are identical from what I have seen. Of course, Harish will add more to that. First of all, for cultural reasons, it is very different because the people who are ultimately, these systems are built for the people. So the culture, the uptake, and the regulations and the governance around it makes a huge difference. Say, for example, in Europe, the GDPR is extremely strict. So the level of data sharing and the information passing between is very different to any other country. So the associated infrastructure, the associated messaging mechanism that happens in that space will have to be slightly tweaked to suit the regulations of those countries. So that's just an example. Harish, probably you may add more to that.
Right. I think there are also the state of development of the financial sector in the country that also has an influence on the type of infrastructures, and there is also implications from the number of entities who are participating. Some countries might have only one, some countries might have multiple. So a good place to look at information could be the BIS website. They have something called the Red Book, which talks about the market infrastructures of member countries of the CPMI. At the World Bank, we also track it, and there's a global survey we do once in a couple of years. And if you go to our website under the look for payment systems, you'll be able to see the summary of information of different countries.
Yeah. So to that end, the size of the infrastructure also matters, right? So you don't stand up a huge infrastructure for a country like Nepal, right? With due respect to Nepal as a country and its size, they don't need such a huge infrastructure similar to what China would have or India would have, right? They don't need a huge capacity. So all those matters. That's why no two countries are identical, maybe to some extent, but not identical.
Great.
Thank you.
Thank you all.
Thank you, Harish, and thank you, Krish.
Yeah, on behalf of College of Management, SRM Institute of Science and Technology, I profusely elated to thank our panelist for the day, Mr. Harish Natarajan, Lead Payment Systems Development Group, World Bank, Washington, USA, and also Mr. Krish Sriganth, Senior Consultant, Payment and Accounts to Account Strategy, United Kingdom. It was a wonderful session to have on the topic, the influence of fintech on global digital economy and the role of market infrastructure at discussion. We learned a lot about the market's infrastructure as well as the various horizons of fintech in payments. I also thank all the organizers of Global Fintech Fest 2021 on behalf of SRM IST. Thank you all.
Thank you.
Thank you.
Thank
So
you.
much.
Thank you, Krish, and thank you, Harish. Thank you so much.
Thank you, Krish, and thank you, Harish. Thank
Over
you,
to
Ritika. Thank you.